Obviously, guys, the markets have been anything other than great these last couple of days. And in today's video, I'm going to be taking a look at some very key factors that could result in why the markets will have a reversal and start actually pumping. A lot of that has to do with a bunch of macroeconomic factors. And in this video, we're going to be breaking those down a lot. It's going to be a lot of yapping, but I believe, guys, that this is the video that you need to see if you want to know what the future of crypto could potentially look like. Obviously, I don't have a crystal ball, but based on some of the research that I've done, this could potentially be what we see roll out in these markets. Markets have been rough recently, but if you are still around watching these videos, I just want to say give yourself a pat on the back because a lot of retail investors have left the market. And if you are part of the few who are still here, guys, honestly, you're probably going to make it. If you're new around here, my name is Ro. I talk about crypto every single day. I've been doing so for the past 17-18 months. I think we're nearing on 2 years actually. So if you guys appreciate this type of content, subscribe, hit the bell notification so you never miss out. With that being said, family, let's get right into today's video. Now, right off the bat here, we're taking a look. Overall crypto market cap, obviously very shaky, very rocky right now. It's going to quickly refresh it. Bitcoin trading under 96,000. Fear and greed index is literally sitting at 10. Extreme fear, guys. That's what we're at. Levels that we haven't seen since like October, or sorry, since the COVID crash. And honestly, that kind of scares me a little bit. However, I think the future outlook overall is still going to remain bullish. And I'll tell you exactly why. You can see here, our favorite cryptos, our Bitcoin, our Ethereum is down. These are typically hedges in your portfolio. When I mean hedges, guys, I mean these are the ones that are supposed to offset a lot of the downward momentum or the losses that we might see in our entire portfolios. And as of right now, these are probably some of the ones that are getting hit the hardest for the sole reason that a lot of people hold these in a great quantity. I know myself, I think like 80% of my portfolio, 76, maybe 70 to 80% of my portfolio is literally Ethereum. Now, mind you, we have been buying in super early, like at the 1500 level. However, we did even make buys at 3600, 3700. Right. And hey, we also sold off a lot at like 47, 48. And if you guys were in the Discord during that time, you would have known because I gave out a bunch of alerts. But that's not what we're here to talk about today. We are here to talk about, though, guys, where we think the overall crypto market could go. Right now, I do realize it is very rocky. Nobody could really see the bright side of things. But I do want to say, guys, there are some key points that I want to go over, and I want you guys to focus on really what I'm about to say here, right? Because there is going to be an end to quantitative tightening on December 1st, 2025, and that is going to be huge. Now, what does this mean? What does this mean? This means that obviously the Federal Reserve is now going to stop draining $95 billion per month from the financial system, potentially increasing liquidity, right? For historical context, the the last time quantitative tightening ended was in September 2019. Now, in September 2019, you guys know what came, but just before that came and the markets collapsed, as soon as quantitative tightening ended, guys, crypto was about to rip it. It was getting very, very close to ripping it, guys. And I believe that is what we are going to experience very soon. You can see President Trump expects $20 trillion to be injected into the US economy in the next 45 days. Now, like I was saying, the last time quantitative tightening ended in September 2019, the markets consolidated before a potential upward trend, and this was disrupted by obviously COVID-19. Now, this could create a more constructive environment for crypto, moving from active hardwinds to a neutral or a potentially just a more neutral stance in the market. Right now, comparing it to 2019, guys, after quantitative tightening ended, there was about a 90-day period of consolidation before any bullish signs emerged, and obviously that was cut short by the COVID-19 crash. However, this time there are some differences, right? The government shut down. Like unlike 2019, the US government shutdown ended on November 13th, which could lead to immediate liquidity injections. As you can see, Trump expects $20 trillion to be injected into the US economy within the next 45 days. And this could mean that more money is going to flow into the markets. Data, right, has also shown that institutions have been accumulating crypto assets. Unlike the retail heavy market structure of 2019, there's a lot more institutions. There's a lot more big money, smart money. I mean, like Strategy, which had to remove its name from MicroStrategy because that thing is not micro anymore. Michael Saylor and Strategy, those guys accumulate Bitcoin like every single day. He tweeted he's been accumulating every day this week. And there's a pro-crypto administration now, right? The Trump administration has obviously been very explicit about their support for crypto. And this reduces kind of the uncertainty compared to that 2019-2020 time. Liquidity, guys. Also, the end of the government shutdown QT could lead to faster liquidity flows compared to what we saw in 2019. Obviously, institutional adoption. And even though retail investors have been selling while institutions are accumulating, this could potentially set the stage for a significant shift, right? Like we're going to see a shift, guys, from retail heavy investors or retail heavy sentiment around crypto switching into a potentially like institution driven crypto market. And if that's the case, you best believe, guys, that we're probably going to break these 4-year cycles if that is the case, because obviously these big institutions, they don't want to lose money. They want to take control. They want something stable like the stock market, right? Now, this doesn't mean, guys, that there isn't potential for a black swan event. You can see here the extreme fear. This is absolutely crazy. Lowest reading since the COVID crash. The possibility of an unexpected event like another pandemic or like macroeconomic deterioration, like a war or whatever. This also could disrupt the market. And the importance of anticipating moves rather than waiting for confirmation, guys, as the market often does, is something that you need to prepare for. I mean, you always say prepare for the worst, but expect the best, right? And in terms of where I think we are going to go in the future, you need to understand that bull markets don't end like this. I've been around for, I'm reading this tweet here, but again, facts. I've been around in crypto since 2017. And let's read this guy's take here. I've been around for multiple bull bear markets: 2001 dot-com bubble, 2008 housing, and 2017 crypto, 2021 crypto. In 21, people really doubted the internet. In 2008, the system broke. And in 2017, people doubted whether Bitcoin could be accepted. And in 21, people thought crypto was fraud and questioned whether it and questioned whether anything in crypto would work. Here in 2025, Bitcoin is being adopted by governments. We literally see ETFs. You see blockchains are being adopted by institutions, and world markets are at all-time highs with more liquidity that is on the way. So when you kind of take a look at the broader context, guys, the shutdown that we had, the shutdown's end could ease liquidity squeeze and reintroduce government balances into private credit systems, as reported. There's been several sources actually. The Federal Reserve's reduction of QT pace in March 2025 led to a crypto market rebound, suggesting policy shifts can have immediate effects. Also, the maturity of the crypto markets right now, with improved infrastructure and the rise of tokenized assets, could drive long-term growth. And obviously, guys, QT coming to an end, this could mean that an inflow of liquidity could come into the markets, potentially meaning that 2026 is going to be extremely bullish for crypto. I've said before that I think that we will peak out in 2025. But the way that things are going right now, guys, I feel like we are going to go into 26. The US Senate just submitted a bill to keep the SEC out of crypto. If this passes, this is going to be absolutely insane. The chart that nailed Bitcoin tops in 2017 and 2021 is flashing again. This time, the trend line points to a mid-2026. Most will ignore it. Hey, if that's the case, guys, then hey, I'm looking forward to it. I think that, a mid-2026 top would be phenomenal. That means that we're still in it. We're still here, guys, and we're still there for the journey. Obviously, fellas, none of this is financial advice. Again, please do your own research, do your own due diligence before you buy into anything. With that being said, though, I will see you guys in the next video. Thanks for watching, family. God bless you. Jesus loves you. Take care and peace out.